Alex, along with it being Friday, remember that we've also entered the earnings season. So most of the stocks in the BNSN cloud are basically stocks that are moving on back of earnings reports. So let me talk about you have also stocks like Visaka Industries that is gaining on back of its earnings. Indus Towers is also a buzz on back of its earnings. Tata Elxsi, super earnings coming in for that particular counter. That stock was up over 9% in trade. HCL Tech is in focus on back of its earnings today. Power Grid is another counter that is in focus today because Power Grids. You had the Innovator that has actually put in paper, has filed for IPO. So Power Grid Infrastructure Investment Trust has filed for IPO. That's why Power Grid is buzzing in trade. Apart from that, you have Glandpharma, Cyan, Dhanlakshmi, Torrent Power, as well as NCC that are buzzing in trade. But specifically, let's talk about the major buzzers in the last few days, and they were the Tata Steel and the Tata Steel arms, that is Tata Steel BSL and Tata Steel Long Products. So these were the counters that were buzzing in trade yesterday on back of earnings. Alex, so all focus on these particular counters, as in what's in store for them and what's the way forward for both of all three of these stocks.
That I think is the conversation to have today, and that will be the focus of today's conversations and what we will be asking our experts about. Which of these three counters should you bet on? And we'll get into the why of it in just a short while. Let me introduce my guests, though. Ashish Kyal, the founder and CEO of Waves Strategy Advisors, and Sharmila Joshi, who is has a website, sharmilajoshi.com. Do check it out. Thank you so much to the two of you for joining in. Good morning to you. And the context that we're speaking about this in is, of course, the results that came out for both Tata Steel Long Products and Tata Steel BSL, as Cheryl just pointed out. Stellar results for both of them. And Sharmila, I want to start with you on the fundamentals here. We've seen steel prices go up over the course of FY20. In fact, there was a brokerage note that pointed out that April as well, you're going to see steel price hikes, and there's a possibility of even more steel price hikes going forward. It's a rosy picture, and you saw EBITDA margins for both these counters go up through the roof. In fact, for Tata Steel Long Products, you saw it going from 13.5% in the year ago period to as much as 32.2%. And both of these companies now focusing on deleveraging, reducing debt on a net basis. Tata Steel looking much better. Which out of these three would you pick? And how do these three counters look according to you on the fundamentals?
Take off from what you said, what we've really seen is sort of a resurgence in the entire metals as a space. And obviously, there are various contributing factors. Again, I think numbers for all these three companies, as you said, they've all had their strong points. And I mean, they've really, turned in a really splendid sort of a quarter when you talk of the fact that their production has also hit new highs. So now, as you said, the question that we need to answer is that which do you like at at the current price? Because at the end of the day, all three are, if you look at the stock prices, they've all had a huge run up in this last year because of the fact that metals has been a preferred play on the back of the fact that we are seeing a sort of a commodity play that that the cycle is turning in favor of metals as a play, and that has you can completely witness it in all the three prices. Now, I'm going to go with Tata Steel, and the reasons for that are a couple. One is, of course, the fact that in terms of market cap is the largest of all these three. So if you're talking, if you're talking of elevated price levels, then I think that's a factor which would be a sort of a protection if the cycle were to turn or to show signs of turning, because companies which are more widely held and which are larger will sustain things better. Also, Tata Steel is an integrated play, so that's another factor in their favor. And again, we've seen data coming in from China that sort of favors Tata Steel as a play because they have certain emission norms where they're likely to cut production. So any global player is likely to sort of benefit from that, because you will see that if China cuts production, and that will sort of affect the kind of availability of products out there, then Tata Steel has a global presence. It's not just a domestic play, but it's also a global player. So from that point of view, again, it's a preferred stock. So I would think that on the non-ferrous side, I would go with an Hindalco, and on the ferrous side, I'd go with a Tata Steel. Again, I think, in the past, I've always spoken of Jindal Steel and Power. But among these three stocks, I think if at this price point you want to buy a stock, then to my mind, it would be Tata Steel.
All right. Ashish, good morning. This is Cheryl also joining into the conversation. What is your take on all three of these counters? If you look at the graph of the last 6 months of these three counters, you actually had Tata Steel, BSL outperform both of them. So how is the prospect looking for all of these? And especially now that the investors after these earnings may look to actually invest in these companies?
Good morning to you and the viewers. See, if you look at all of these three counters and do a ratio analysis or try and do plot it all on the one chart, you will be able to see that all of them has strongly moved sharply higher from the lows which was formed in the last year. And in the past 6 months to 8 months, they have all outperformed. Out of this, I would say that Tata Steel long product has been the stock that actually showed a very strong outperformance compared to Tata Steel as well as Tata Steel BSL. The reason being there is more risk to it because the volatility is higher in Tata Steel long product. That's why it is demanding a better return, and that is what we can clearly see. So if you compare the stocks right from the period of say April 2020 till date, you can make out that Tata Steel long products have essentially given nearly around 279% return as compared to 250% given by 58%, 258% given by Tata Steel BSL, and Tata Steel giving somewhere around 239%. So over here, the selection should be not essentially in terms of the chart pattern. I would say in terms of the risk appetite, because Tata is still long product belonging from the having a lesser market cap, more volatile. So if you are ready to take more risk, then Tata Steel long product can outperform. But given that all of these stocks have already rallied so much from the lows, the risk is high. I would like to bet on Tata Steel itself, given that it belongs to the large cap. In case there is any kind of a correction that we will see, Tata Steel might outperform both of the other ancillary units. So I would be preferring Tata Steel at the current price and maybe more on the dip. So Tata Steel is the flavor that I prefer. In case we get a very good correction in Tata Steel long product, then you can start looking out for accumulating that stock as well.
All right, fair point. So consensus view between the two analysts there, both on the fundamental side as well as on the technical side. But coming back to you, Sharmila, on a point to make with regard to Tata Steel. Now, a few weeks back, if you'll remember, there was this big announcement about this infrastructure spend that is being proposed in the United States. And there was a lot of excitement around that because obviously you would need copper, you would need a large amount of steel for an infrastructure boom in a place like the United States. But should that be taken with a bit of a pinch of salt? Yes, India is a large producer of steel, but when you compare it to China, it's really, the ratios are skewed very, very sharply. So should there be a bit of a pinch of salt, and how do you see Tata Steel benefiting from global demand going forward? What do you think about steel prices?
To answer the first part, I agree with you that to think that you will benefit from any infrastructure project in the US seems like a far shot. But here's the way I'm looking at it. The thing is that at the end of the day, Tata Steel has a global presence, and once you start coming out of this COVID situation, and I think it stands to reason. If you look at the way vaccination is proceeding, it stands to reason that whether it is US or smaller countries have already, like, and Israel has already finished this vaccination program, and various other European countries will fall in place, whether it's UK and the rest of the European Union. So I think there is going to be a sort of a slightly increased demand for metals. And in the interim, you have China saying that they have cut production because of, or they're asking companies to cut production because of emission norms. So on the one hand, you have the largest producer saying they're going to produce less. You have a situation where prices are improving. And again, as you said, there seems to be every indication that that there is a situation where there could be an increased demand globally for whether it is ferrous or non-ferrous products. Which is why actually, that was one of the reasons why I preferred Tata Steel over the other two players, because they can obviously benefit from a better global demand, because they are in the geographies and they would be able to supply. Coming to prices, I think there is every indication that at least for the next 3 months, prices seem to be on a strong wicket. Now, what happens as we start coming out of the pandemic situation remains to be seen. But all indications seem to be that most of the products that Tata Steel has, you have seen increase in prices, and that is likely to sustain over at least the next 2 or 3 months.
All right, so that's the view coming in on the steel prices from Sharmila as well as on Tata Steel, saying that the company is better placed to benefit from the global demand, and also she expects to see stronger prices to be on a stronger footing going ahead as well. If you look at both of our analysts, both of them have a consensus long-term bet on Tata Steel. They prefer Tata Steel over the longer term compared to the subsidiaries of Tata Steel. But let's get the high risk and the low risk ideas from both the experts. Then Ashish, I'll come first to you. What are your high risk and low risk ideas for viewers today?
See, the first stock on the buy side is going to be SBI Life. We can clearly see the stock had been consolidating for some time in a very broad range. And in today's session, we are seeing a very strong bounce back and a move on the upside. So it seems that post consolidation and contraction in volatility, we should start seeing now a trending move on the upside. The risk is going to be high because it's a short-term call, and one can create long position in SBI Life, keeping a stop loss of 900, expecting a target of 1,000 over short term, and eventually this stock should do and outperform and probably cross 1,000 as well if you can hold it from the medium-term perspective. The next stock on the buy side is going to be Deepak Nitrite. We have seen some spectacular rise in this stock in the form of third wave, and it has given very strong returns to the investors. Over short term, it formed a very important low near around 1520, 1530 levels. It tried to protect that 2 or 3 times and bounce back from that. So it looks like that level should remain protected, and we should now head much higher from here towards the level of 1760. Over short term, one can use a stop loss in Deepak Nitrite somewhere around 1585 for the target of 1760, and the overall sector is also supporting. So we can clearly see this space has been in the buzz and outperforming, and despite we saw a lot of volatility in the broader market, this stock managed to outperform. So relative outperformance comes here in Deepak Nitrite. The risk is going to be high, so ensure you place a stop loss and expect a target of 1760.
All right, that's a view coming in on the technical side. Sharmila, I'm going to have to request you to give us your view very quickly. What are your high risk and low risk ideas?
So the high risk idea is Voltas, because what I'm expecting is that summer is always a good season for their products, and they seem to have come back to pre-COVID levels in the festival season, and that's likely to continue. The risk, of course, here is that because of the second wave, you may see a little bit of people spending less going ahead for such kind of discretionary products. So that's the only risk, but otherwise Voltas continues to be a good play in that space. And my low risk idea is in fact Dr. Reddy's, because I think that the second wave has meant that we are now sort of coming around to the idea that vaccination is the way to go ahead. And earlier I think that there is resistance given the percentage of people who've gone in for vaccination. So that's going to pick up. And for Dr. Reddy's, obviously the good news is that they are going to roll out Sputnik in June onwards, and going by the pricing against that Covishield has declared, it sort of seems to indicate that if Sputnik comes at the price that is being spoken of now, then there will be good demand for it, and it will mean good benefit for Dr. Reddy's as well. And their overall, their basic business is also doing well and will be on a good trajectory going ahead. So Dr. Reddy's would be the low risk idea.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But when we come back, we will come back with your viewer queries. So all of you who've not logged in, please do tune in to YouTube or Twitter or Facebook, whichever you prefer, and ask your queries live and get them answered live. So on that note, we'll slip into a break. We'll come back with the query segment. You're watching Buy Now, Sell Now on ET Now, and let's get going with your queries. We have first queries from the YouTube. This is from Manas Gore. He's saying that he's bought Eicher Motors at an average price of 2,256 rupees per share, and he's been holding since September 2020. He's interested in holding this particular counter for a longer term and accumulating more as well. So he wants to know whether this is the right price to go ahead and add a few more stocks. Ashish, I'll come to you with this particular query on Eicher Motors. Last 1 month has not been that great for this particular counter, and given that the COVID wave, second wave of COVID has come back very strongly, is definitely going to hurt the auto demand as well. So how is this particular counter poised, and also does it make sense to accumulate right now for a longer term?
See, overall, the auto stocks, if you look at it, since past 1 year, the auto stocks have actually performed well. We can clearly see same thing even Eicher Motors. It formed a low somewhere in the zone of 1300. From there, we saw a move towards that 3000 mark, and then we are seeing some kind of a retracement. So if the time horizon is from medium to long term, then I would suggest that yes, this stock can be accumulated even at current levels. There is more potential, and I think the overall auto sector can slowly and steadily start outperforming, because if these stocks can do well in these kind of challenging times of COVID, then I'm sure that these stocks will outperform. So as far as Eicher Motors is concerned, yes, we have seen some kind of a correction over very short term from 2700. The stock is now at 2350, but I think it should manage to protect that level of around 2000. So keep that 2000 as a stop loss. And I am expecting the stock will eventually start outperforming. So I'm not expecting it to do it immediately, but slowly and steadily there can be more accumulation happening as long as that 2000 level is protected. Use this dips as a buying opportunity, and we should see the stock eventually moving above 3000. But you have to stretch your time horizon at least from 6 months to 1 year.
Fair enough. All right, that's a fair call on Eicher Motors. Sudha has got a question, and this one's for you, Sharmila, on Titagarh Wagons. She says that she's bought at price of 90 in 2018, and the price is half of that, nearly 47, and she's losing significant ground. What she's essentially asking is, should she average and hold on to this stock, or should she book losses and move to something else?
Is in railway wagons, the railway wagon space, and the current situation is obviously not the best situation for a stock like that. So if you are expecting that that you will be invested in it long term enough for things to sort of go back to normal, and then demand to start increasing for their products, then it's a different thing. But my advice really would be to exit the stock, because we are in a market where there is an opportunity cost involved in staying in stocks or sectors which may not really kind of participate in the rally as much as some of the other sectors. So I've said it often enough that my favorite sectors are IT and pharma. So I would request you to shift your position to one of these, and you'll probably have a better chance of making up your loss rather than staying invested in Titagarh.
All right, the next query is coming in from Shivakumar on Nazara Technology. He wants to know whether it's a good buy for long-term investment. Sharmila, what's your take on Nazara Technology? Recent listing, does it make sense to buy for long-term?
Well, I would really hold on for now, because I think that we are going through a phase where a lot of these new listings, they are sort of reacting along with the market moves, and they are getting sort of caught up in this sort of sell-off. So I would really think that it's not a good idea to buy right now, but probably wait for a month and a half before you think of buying Nazara.
All right, let's also address the fact that we had a discussion about Tata Steel, and a number of you asking about Tata Steel BSL, as well as Tata Steel Long Products. Both of our experts had the view that Tata Steel is the counter that they would prefer, because it would be more resilient in the event of a turn in the cycle. Now, I want to address, if you have a view on this, I'll come to you on the technical side. Just a view on NIIT, and we had this question yesterday also, I believe. The question is whether to stay. So it was bought at levels of around 200, and should they hold on to the stock? This is from Akash.
The overall trend for NIT had been positive, but it's a very volatile stock. You can see a jump from 140 to 190 in just 2 days of time, and post that we are again seeing some kind of a down move. So I would rather prefer something like Tata Elxsi, which has been in a constant secular uptrend, and we have seen a very strong outperformance compared to NIT. So in case he's comfortable getting out of the stock and parking into Tata Elxsi, that is much preferred choice. From the technical level perspective, if one wants to still hold on to to NIT, he can use a stop loss of around 160 on the downside, and then expect it to go towards around 190 to 195 levels. He can hold on to this stock, but the preference will be towards Tata Elxsi if that is possible to be shifted from this stock.
Next query is coming in from Shubh Mathur on Imami. He has a short-term target of 550 rupees per share. What's your view on this particular counter, Ashish? And what about the target price that Shubh has mentioned?
Yes, see, Imami has been again a good stock, outperforming. It has managed to protect its moving average of, if you look at the around 50 days average, it is managing to protect that. The speed is not that strong. It has been slowly reducing the speed, which we can measure by looking at the momentum indicators. There is some kind of divergence, but nevertheless, I think 550 is a doable target that's achievable over short term. So he can maintain that target and hold on to this stock on the downside, but he has to play with a very strict stop loss. So maintain a stop loss of around 490. As long as that level is protected, which is just below a 21-day average. So if that level is protected, I think the stock can reach towards that target of 550 he is maintaining. So hold on to the stock for now.
Okay, this is a very interesting question. All right, Sharmila, and I think it's pertinent for quite a few of the large cap counters that have gained significant ground in the recent past. The question is from Parth Shah on a strategy, from the perspective of strategy. Can you ignore, or can I ignore, the price to earnings ratio of a company if I find that the company is attractive on other grounds?
Should I take that?
Yes, please.
Yeah, okay. Very interesting, because I think that we are living in a time where PE is something that the market doesn't seem to be really looking at too closely, given the kind of valuation we are seeing on some of the stocks. So I think, yes, clearly the current mood seems to indicate that you should be looking beyond PE. You should be looking at what could happen in the year going ahead, and where, post-COVID, where the demand could come, or even during COVID, where the demand could come. And there is another theory about China +1. So, these are the kind of strategies market is working with. And if you want to be part of that trend, then I don't think that PE should be such a big consideration for various reasons. I mean, you are expecting earnings to improve going ahead. You are expecting demand to come from certain different reasons, for various different reasons. So those are all things that you need to take into account. Like, for instance, pharma is coming out of a very long period where things were going against them. Now those things have fallen into place. Plus, there seems to be an indication that because we are low-cost producers, we could be participating much more in a whole lot of medicines, not just vaccines, but in a whole lot of medicines required for COVID, etc. So there is definitely an opportunity there, and therefore, PE may not be the only way to look at it, because their earnings are going to improve going ahead. So there could be various things like that, but I would broadly agree that this current market situation does seem to be one where PE cannot be your only consideration for making an investment.
All right. The next query is coming in from Sudhir Sahu, wants to know about on mobile. What should he do? Is it a buy candidate or a sell candidate? And I'll come to you, Sharmila, with this question on mobile. If you see in the last 1 year, the stock has just zoomed. At 312% in the last 52 weeks. That's the stock gain coming in. But fundamentally, does it make sense to invest in this particular counter right now, or should the investor wait for some more time?
It warrants a wait, but this is again one of those classic plays where you're looking at a stock where you're not really looking at the earnings or the P that it is bringing, but you're looking at things beyond that, and what it could mean for the sector the company is in, and how things could pan out for them going ahead. So people are being a little optimistic about how things could pan out for the stock, but I think in this recent sell-off that we are seeing, it probably makes a little better sense to hold on for now. So I wouldn't really recommend a buy at this price.
Okay, I'm going to have to request both of you to keep your answers a little shorter because we've just been flooded by questions on social media. And thank you all of you who've tuned in live. We're going to try and take as many questions as possible. I'm going to start with a question from Miss Kumari on JK Towers, bought at levels of 130. And this one's for you, Ashish. What is the outlook for the next 6 months or so?
I would say JK Tire looks like short-term correction, but from 6 months perspective, there is a possibility we can get towards that cost price and maybe beyond. So hold on to the stock, use 100 as a stop loss on the downside, maintain strict stop loss, and then eventually if the stock manages to cross 115, we can expect it to go beyond 130 levels.
All right, our next query is coming from Saeed Imad, and this is on Vodafone Idea caveat, a stock which is very volatile and based on news, ideally should be avoided to invest in. But I'll take this query of Saeed. He's bought Vodafone Idea 5,000 shares at 11 rupees 74 paise. He's currently in loss. He wants to know the views. Sharmila, I'll come to you on Vodafone Idea. A lot of news flows on this particular counter. We know what is happening with the company as well. Does it make sense to continue to remain invested in this particular counter?
This is a classic case of where PE is not something that obviously the investor there has looked at before buying. So here, I think the whole play is whether they'll be able to repay their debt, whether they'll be able to participate in the increased use of internet, and because really speaking, mobile phones is no longer about just using it as a phone, but it's more on the amount of internet people are using, etc. So I would say stay invested for now because they have managed to repay some part of their debt and they seem to be getting out of the woods. So it warrants a hold at this point in time.
So there's a clarification, Sharmila, and you can give me a very quick view on this. This is from Akash itself. He's asking about Shipping Corporation and IDBI Bank both, and these are apparently divestment candidates. So would you buy them in anticipation of that?
Very honestly, that's not a strategy I like. And Shipping Corporation definitely is not a business that I have recommended. I'm sorry, I didn't get the other name. IDBI Bank. I think among the PSU banks, probably SBI is the only bank that I like. So I'll just leave it at that. I wouldn't really recommend an investment in either.
All right, the next query is coming in from Pranav Dangi. He's bought Arvind Fashions 1,100 shares at the price of 160 rupees per share. He wants to know whether he should average it further. Ashish, what's your view on Arvind Fashions?
See, I would suggest him to be avoiding any stocks, group stocks with respect to Arvind Fashions, because these stocks have not given any kind of return to the investors, and rather they have drastically underperformed over the brief period of time. And in the current situation, I don't see it doing much even now. So it's best to be getting out of this stock. If you want to invest into still some kind of a textile company, then I would prefer something like Century Textile, which at least have some kind of a very strong base. So prefer Century Textile over this one.
Coming back to you, Ashish, on this one, we've got Sahil Mathur asking about Oracle Financial Services Software. Bought it at levels of 3,233, which is not too far away from where the stock price is right now. What is the outlook in the near term?
Oracle Financials is actually consolidating over past many months. So this consolidation phase should get over and we should start seeing a breakout out of this stock. Given that the entire sector is breaking out on the upside, I'm assuming that there is going to be a positive breakout. So hold on to this stock. Don't lose patience at this point of time. We can expect it to move beyond 3,500 and eventually head towards 38 or 3,900 levels. So hold on to this stock. Maintain a stop loss of around 3,150 on this stock over short term.
All right, the next query is coming from Diti, is saying that bought Dishman Carbogens at 160 rupees per share. Can I average this stock? What will be the target price and time period for this particular counter? Ashish, would you like to take this one, this particular query on Dishman Carbogen? Buying price is 160 rupees per share.
Yes, see, this stock was in downtrend from 210 levels and made a low near around 110. That's like a 50% correction of exact 50% Fibonacci retracement is what we saw in this stock, from where it's bouncing back now again with a very sharp price. So yes, you can buy this stock, but don't average it now because it's very near to your cost anyways. Keep riding this stock, maintain a stop of 140. I'm expecting that this can be the fifth wave and can result into an up move back towards that 200 mark, provided that the broader market continues to stabilize. And so one can expect it to go towards 200, maintain 140 as a stop loss. Maybe if it goes towards 180 levels, you can do some kind of a partial profit booking.
All right, coming to you, Sharmila. Parth Nagpara has bought IndusInd Bank. It's been weak in the recent past. He bought it at levels of 947 with a long-term view. Would you say that he should hold on?
Bank that you can hold on to, and there are obviously some near-term concerns because of this interest on interest and etc. So all those things need to be sorted out, and the NPA picture etc. needs to be will get clearer over the next 2 months. But this is a stock that I like, so I think we can hold on.
All right, there's a Twitter query that we've got from Milton Lobo saying that he's holding Anthony Waste at 357.75 rupees per share. He wants to know whether he expect some more correction to come into this particular counter so that he can add more stock, or does it look stable from here on? And also he's holding Tata Power at 95.4 rupees per share. He wants to know what's the expected target price with a 1-year time horizon. Ashish, first we'll take on Anthony Waste. How are the charts looking for this particular counter? Some more correction in the offing, or has it stabilized?
See, this counter has shown a pullback from the 240 levels mark and managed to bounce back from there. So there is a possibility we can see some kind of stability, but keep in mind this has formed a lower high, lower low continuously. So he has to be okay with that if he does not get the desired outcome, which is the uptrend. For now, we maintain a stop loss of 270, and if it breaks 270, then get out of this stock, and then on the upside, we can expect it to go towards that 310 levels. So 270 is the SL, 310 is the target that he can maintain for this stock right now.
All right, Santi, I'm coming back to you. Ashish, I'm coming back to you on a question from Santi. This is on Sun TV. And this is a bit of an involved question, so I'm going to read it out very quickly. He thinks that the stock is bearish, trading below all averages and nearer to 461, which is the 200-day moving average, with good support at 450. This is his interpretation. He's asking whether you would buy for the short or medium or long term. What is the view here?
I would first like to congratulate him for such a brilliant interpretation. He is very much right. 450 is the level from where we saw the stock bouncing back multiple times. And it is trading below the average. So there is a contradiction. I would say it's above the support but below the average. So it's moving between the support and resistance levels. I would not do anything right now. If it breaks 450, then we are headed much lower in the stock. So wait for that. Or if it breaks back above that 480 mark, then there is a possibility of a positive breakout. So this is a triangle pattern. Wait for which direction it breaks out. So buy above 480 or sell below 450. That should be the strategy you can look at on the chart.
All right, and that was the last query for the day. Thank you, Ashish, as well as Sharmila, for waiting by and resolving all the viewer queries, sharing your views on Tata Steel and subsidiaries, and also giving your high-risk and low-risk ideas. And for all of our viewers, do tune in on Monday at 11:20 a.m. live on YouTube, Twitter, as well as Facebook to post your queries so that we can answer them live as well. But on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side. Don't go anywhere. Management of Nazara Technologies. We have the CEO of Nazara Technologies, Manish Agarwal, joining us. Good morning, Mr. Agarwal. Thank you for joining us on ET Now. And let's actually start off this discussion by with you sharing with us the business updates for the year, and also share with us what you believe has actually driven the growth for Nazara Technologies.
Hi, thank you. Thank you for having me here. And it's always a pleasure to be with you guys. We announced our business results, which is an update, while the full audited results will get announced in a month from now. We wanted to share a business update with all our shareholders. And we are very happy to share that we have grown 84% in revenue in this financial year. And we have grown 470% in our EBITDA numbers in this financial year over the previous financial year. Company delivered 454 crores of revenues in financial year finishing March 21, against 247 crores, which we did in the last financial year finishing March 20. Our EBITDA margins have also increased from 4% last financial years to 12% this year. And this EBITDA margins are at a total 100% consolidation basis across the group. So that's been a journey of last 1 year. As we had always said, we are very, very excited about the gaming and the gamified learning opportunities, which are in front of us, both in India as well as in other markets like North America and emerging markets like Middle East, Africa. We continue to be very excited with the whole growth in the gaming industry. And two segments which have really kind of stood out in last year, which have driven growth, are gamified learning and esports. Both of them have not just only grown in revenue numbers, but also have grown in terms of EBITDA margins. And more importantly, the lead indicators of the number of users, number of paying subscribers, the number of hours of content created, number of partners which we really work with, all of those KPIs have really improved in 1 year, which means our platform is becoming more solid and is really kind of creating a great springboard for future to continue this growth momentum.
Manish, thanks so much for joining in. This is Alex as well. I would like to ask you a couple of questions, if I may. The first one is that we've seen a seminal shift in the way that content is consumed, and this is the sign of the times. We've seen the pandemic since the start of last year. Data usage has gone up significantly. People are spending much more time on their screens, on their mobile phones. So yes, the opportunity is definitely there. How do you make use of that? Do you think that that will remain? Because eventually we're going to go through this pandemic. We will go back to a semblance of normalcy. So first question is that. And the second question is, we've seen a huge volume of content that has hit users on an ongoing basis. How do you stand aside from that crowd? How do you stand out?
If you look at your first question is the trends which we are looking at. We are saying that a sports fan is always driven by play, compete and watch. However, the underlying games, were a traditional playing in your cricket grounds, in your maidans, in your gullies. Now that games will continue, but there's a new games which are happening around on video. And those video games is what the sports fan need, is the same play, compete, watch. But the underlying game could be a PUBG, could be a Free Fire, could be a World Cricket Championship, could be FIFA. And that is where the new generation of players, gamers, competitive sports, and watchers is happening. And that's a trend which is not started by COVID. It is a trend which has been around for now last 4 or 5 years. And that trend has got accelerated because more and more people have come in and started spending more time on gaming. Likewise, a trend of learning from apps is a secular trend. It is not going to go anywhere, especially the segment which we operate of young learners 2 to 6 in nuclear families with parents with devices becoming more and more easily accessible on homes. Kids are spending more time on those devices. And that is where the learning and edutainment will combine and to create this whole edutainment opportunity. Again, this is an opportunity which started as a trend 4 or 5 years back, 6 years back, and has been really there in the developed world, which is where most of our revenue comes from North America in the kids learning. And we believe that these secular consumer trends have been initiated 4 or 5 years back in India. They got accelerated because of the cheap data 2 or 3 years back. And unfortunate events like COVID have accelerated that habit. And these habits will become more and more pervasive and more permanent as we see in the next decade. Right. To your second question, it's a content business, as you rightly said. In a content business, what you need to continuously keep doing is that you need to really create experiences which not only engage your players or users, but kind of really create a very deep affinity and a very strong sense of community, so that you are building a moat which cannot be easily disrupted with another content provider, and a constant understanding of what your consumer needs, how can you update it, how can you really engage them in a community aspect. That is very important for us to continue to grow. And today, with the amount of tech available with you, it's not a manual process. You can really deploy a very strong tech understanding of the user behavior and plow it back to really drive those engagements and attentions.
Mr. Agarwal, I'll also like to talk about your investments. So you've invested about 300 crores in Indian gaming ecosystem. What is the total cash on books, and also are there any other acquisitions that you all are eyeing?
So if you look at Nazara's strategy, what we call is Friends of Nazara Network, we have always maintained that the space in which we operate of entertainment, content, gaming, this is a space which is driven by passionate founders. And you cannot kind of take away that whole passion by saying that, hey, listen, all creativity can be subsumed under one roof. Our strategy has been that you work with passionate founders and grow the businesses together. And our view has been that this Friends of Nazara Network will continue to grow in future with more founders getting added to this Friends of Nazara Network across free-to-play mobile gaming, gamified learning, and esports. These are the 3 areas which we have identified as a massive growth drivers in the overall ecosystem and for Nazara. We have seen in past, and we have a demonstrated track record of working with founders, growing revenues, growing margins, and creating wealth for them, for their shareholders, for their investors. And that is where we really kind of would like to double down and find more like-minded founders who are more friends than transactional relationship. And that is where we will continue to focus and find right IPs, right founders.
All right. Thank you so much, Mr. Agarwal, for taking the time and for giving us the outlook for the business going forward. Wish you all the best. And on that note, we're completely out of time on this edition of Buy Now, Sell Now. It's been a pleasure bringing it to you from all of us here at ET Now, Cheryl and myself included. Thank you so much for watching. This is ET Now.